Inflation came in roaring, came in super hot, a lot higher than expected. The Mag 7 stocks are mostly down for the year except for Meta. However, the S&P 500 and the Nasdaq seem to be shaking this off as they are near all-time highs still. So what can we expect from the market here? Because I think there's a really unique situation that might melt us up above all-time highs in the near term. So we're going to get into a short overview of the market, and then I want to discuss some of the buys that we recently made on a few of the mega cap stocks. So I'll be giving you an update on stocks such as Tesla as well as Nvidia, two stocks that we actually bought, or I should say bought more of. And then towards the end of the video, I will give you some of my current trade ideas and trades that I'm already in so that you can be kept abreast of what moves I'm making and maybe get some ideas for yourself, see how it is that I actually trade, get a sense for the strategies that I use. Maybe you can learn something from that and incorporate it. I love to spread this info. I also respect your time. So everything will be timestamped below. Let's get right into it. So if we start off with the inflation data, you can see here, this is the CPI. CPI came in hotter than expected. 3.0% versus 2.9%. If you look at the CPI month over month, it's even worse, 0.4% versus 0.3. If you look at PPI, which was today as of the time of this recording, Thursday, February 13th, came in much hotter than expected, 3.5% versus 3.2, and the month over month was 0.3 versus 0.3 for the core PPI month over month. This was the one thing that saved the market. Not really, and I'll get into why that is. In my view, I don't think that the market cares about inflation. I've said this before and I've received some flack for it, but I'm a data-driven analyst. I'm a data-driven guy. I'm a data-driven trader and investor. And when I look at all of the times that CPI came in hotter than expected, you can see here all in the green. January, February, March, and April, 4 months straight of 2024, CPI came in hotter than expected. But if we go back, this is January through April. This was probably the best stretch of 2024. It was just a straight line up. So the only thing I can conclude from that is that the market does not care about these incremental, hotter than expected inflation prints, because I think the market has digested that inflation will stay in this high 2s to 3s range. Now, if inflation starts getting to 4, 5, 6%, obviously much different story. But as long as it's in this range, a range that the Fed says is okay. Remember, the Fed last time said that they are not going to necessarily wait until it gets to 2% in order to start cutting rates. Well, the market is, pricing that in. Plus, we have the Trump tariffs, right, which some are expecting could be inflationary. I personally don't think they will be inflationary because the 2018 tariffs were not inflationary. We already have data on this. But for all intents and purposes, I think the market is expecting some form of inflation, but as long as it's hovering in this range, the market seems to have accepted it. So that is why I don't put too much stock into it. Now, the reason that I think there could be another melt up here is because, as I said in the intro, if you take a look at, I'm going to go to the monthly chart, but if you take a look at Apple, right, down on the year. If you take a look at Nvidia, down on the year. If you take a look at Amazon, pretty flat on the year. If you take a look at Google, down on the year. If you take a look at Tesla, down on the year. If you take a look at Microsoft, it's down on the year. And if you take a look at Meta, ever since Mark Zuckerberg was staring at Lauren Sanchez's chest, the stock just cannot stop going up. So Meta is the only thing that is going up at the moment. But 6 of these 7 Mag 7 stocks are down for the year, yet you can see that the S&P 500 is up for the year, as well as the Nasdaq. And not only that, we are very close to all-time highs. As a matter of fact, the all-time high close on the SPY is 609.75. And today on February 13th, the close was 609.73. So we are basically at all-time highs. And on QQQ, the all-time high close was 538.17. And we closed today, February 13th, at 535.90. So just a fraction of a hair from the all-time high close. Now, what this means is that the breadth is actually pretty good. Obviously, this is, February, so a very small sample size for the year. We've only had a month and a half. But that means that breadth is better than we thought, meaning that outside of the Mag 7, all of the other companies, the 500 other companies in the S&P 500 or the 93 other companies that are in the NASDAQ, right? Those companies are actually now gaining, keeping the stock market at all-time highs, not needing the Mag 7, which was basically the theme for the last 2 years, was that the Mag 7 were the only stocks driving the market. So when we take a look at Tesla at the 100-day moving average, when we take a look at Nvidia, which hit the 200-day moving average, when we take a look at Amazon, which hit the 50-day moving average, when you take a look at Google, which hit almost the 100-day moving average, these are major moving averages that the Mag 7 have not seen. So if we get our typical bounces from there, right, and we don't get a correction in the market, and we get our typical bounces from there, then what happens to the S&P 500 and the NASDAQ? If the underlying stocks, aside from the Mag 7, kept the stock market afloat, and we are now at all-time highs, when the Mag 7 start bouncing from these major moving averages back to their all-time highs, that means that the indices will likely see a melt up. So as of now, that is the scenario that I'm working with. Now, let me get into the analysis on the individual stocks and what I think the plays should be from here if you are interested in these stocks. And in full disclosure, I sent every single one of these out in the Discord already, including my very detailed write-up for how I see 2025. And I have no problem showing you this now because I sent these alerts out a few days ago, so we already got in at great prices here. I'm just showing you an example of what type of analysis we send, what type of alerts we send, etc. And like I said, I want to give you a little bit insight into my investing strategy and my swing trading strategy. So I did have a couple of swing trades on Tesla before. As you guys know, if you follow this channel, I shorted once we retested this line. This is the previous all-time high, right? So once we dropped back below it, came back to retest it, as well as retest this trend line, I ended up shorting it. Now, I closed that short when we hit this level here, right? Before this continued drop. This right here was my position. It was the 405 Tesla puts expiring February 28th. Got out for 75% on those contracts, but I ended up taking a swing long from this level here, and I wanted to see this level hold. We popped above slightly, but once we got below, I ended up closing those for a slight loss. Now, after that happened, and we got this candle here, based on my analysis on Tesla, every time it significantly closes below the 50-day, it always tests the 100-day. This has actually never failed. Even in bull markets, if you look back at Tesla, every time that it has closed significantly below the 50-day, it tests that yellow line, the 100-day. So the 100-day at that point was my target. And on February 11th, which is a couple days ago, I ended up sending this out saying that this was the level to start buying shares at, the 100-day moving average, because that was my target here. Now, a couple of things that are scary in terms of Tesla that I need you to pay attention to if you are a Tesla shareholder. These boxes here, let me remove the moving averages real quick, okay? These boxes here represent Q1 and Q2. Tesla suffers from a major seasonality problem. Q1 and Q2 are almost always bearish for Tesla, right? Starting in January, ending right before June, you see these big drops. Even if we have these big rallies, you see these big drops on Tesla. This happened in 2022, in 2023, in 2024. And you see that this is the start of a drop here. So I'm under no illusion. I don't think that Tesla, unless we get some sort of unexpected news or update regarding robotaxi, which right now is the play because car sales are declining heavily. There's no two ways about that. Its last earnings, in my view, were terrible. I'm not going to sugarcoat it. And you can see all across Europe as well as in the US, car sales are down. So right now, the story is AI. The story is not car sales. So the market wants to see a more of an update on AI. This is why Dan Ives or some analysts at JP Morgan still have a high price target on Tesla. It's because they are expecting Tesla to lead the way in terms of autonomous driving, which they value already as $1 trillion business on its own. As I said, that seasonality is definitely scary. And the other thing is there is a ton of confluence at 275, unfortunately. So you have this high, this high, this high, major resistance. You have this gap here, right? And then if we pull up the moving averages, you have the 200-day right there as well, the green. So all of this, you have so much confluence in this area here that if that seasonality plays out and we don't get updates, I think Tesla can drop there. Now, this is not a thesis that I'm yet willing to bet on with options, okay? As of now, the only available plays that I think are on Tesla are buying shares, which we already did in the 330s. It is now almost 360, and selling cash secured puts in order to be assigned or potentially assigned 100 shares of Tesla much lower. So if we take a look at Tesla here on Public, shout out to Public, my favorite broker at the moment. It's a registered broker based in the US with not only are options trades commission free, but they give you rebates on your options trade. So you actually earn money. Not only are they free, but they give you a cut of the money that they make on trades. So if we go a month out, for instance, on Tesla, or a couple months out, let's go to the monthly expiration, the March 21st expiration. And if you look at something like the 300 put, you could sell that for $435. And if you get assigned, then you're going to be buying 100 shares of Tesla at almost $295, right? 300 minus the premium that you receive. And obviously, you can go even further down for less risk. You could sell the 275s for almost $200. If you own a lot of shares, you can sell calls on this run up here. So if you look at the calls as of the time of this recording, because of the couple of days of 4 or 5% price action, these calls are up tremendously. So you can go pretty out of the money and sell calls like the 450 call against your shares for $355. If Tesla is not $450 by March 21st, you keep the $355. If it is, then you sell your shares for $450 plus the $355. So $453.55 is what you would sell your shares at. You need 100 shares in order to do this. But that right now is my view on Tesla. My next buy point will be 275 if we get there. Nvidia, we have calls on Nvidia, and I also bought shares when we tested the 200-day. We bought the DeepSeek fears. Here is my alert from January 27th saying that Nvidia is at the 200 MA for the first time in 2 years and that this was a buy point. So we ended up picking up Nvidia at 118. In my case, more Nvidia at 118 because I already picked it up on August 5th. So my average on Nvidia is coming out real nice. My last big buy was 95 and my second big buy was 118. When you can read a chart, you could take your investing to the next level. Yes, I know you hear these mantras, just buy and hold, just buy and hold, sit on your shares, don't look at your account. I don't believe in that. I believe in maximizing your potential by overweighting your purchases at major levels. If you're someone that doesn't look at a chart and has no indication for what these prices mean, you can use something simple. Even if you're not a technical analyst, it's fine. You can use something as simple as moving averages. But instead of buying Nvidia FOMOing at 150 or 140, you can wait for these major levels and then go in heavier than you would have even at the 140, 150 levels. And if you want access to every single one of my buys like this, if you want it all in real time, and you would have gotten Nvidia at 118, you would have gotten Tesla at the 100-day moving average, you would have purchased Uber at 59, which is now just tearing it up. It hit $80 today. You guys know that Costco is my second biggest winner this year. Look at that, a straight up nice bounce from the 100-day moving average. Already up $100 per share in very little time on Costco. Come join us, join the hundreds of traders where you can ask questions all day, every day. You don't have to go at it alone. If you're only interested in long-term alerts and that's it, and you're not interested in trading options or short-term trading, that's fine. We do have a more affordable rate for you guys as well. I try to make it fair for everybody. That's only $35 a month, I think, at the moment. But if you want to trade live with me every single morning, there's an option for that as well. You'll find both of those in the description. Come and join us. All right, so Nvidia, like I said, we bought Nvidia at 118, but not only did we buy shares, you can see here in my public account that I share with you guys publicly, I bought the 130 call expiring March 14th, and I also bought some more calls in my other account. But basically, it was a retest of this level. So yes, we broke out of the 200-day, right? And we retested this level. Now, why this level? Like I said, I want to teach you guys very simple ways in order to be able to come up with these trades on your own. I want to teach you guys how to fish. The reason that this level is important is very simple. If you could draw a horizontal line, you can swing trade. You have this level here, right? What is that? Resistance. What is this candle here? Resistance. What is this candle here? Support. What are these candles here? Support. What is this candle here? Resistance. So the chart is telling you this is a very important level. So when we broke out of that, that's obviously bullish. What happens when you retest it? You are expecting a move up. Now, one beautiful thing about Nvidia is that it almost always fills its gaps, right? So we have this huge gap here between 142 and 128. But you can see here, gap fill, gap fill, gap fill, gap fill, and so on and so forth. Nvidia rarely leaves gaps. Even here, right, when we dropped on August 5th, it was to fill these unfilled gaps here. So I bought the calls expecting for a gap fill. Obviously, I thought the DeepSeek story was BS. I did a video on it. You can watch it here if you are interested, even though that's old news now. And once we get to that 142, what am I going to do? Well, I'm going to go in here and I'm going to sell calls. Obviously, the call values here are less than what they will be if Nvidia gets to that 142. But once we get to that 142, then I'll be able to sell calls above all-time highs. I will be able to sell the 160 calls against my shares. Now, Nvidia still needs to close above the 50-day and the 100-day, which are smacked into each other here. So I need Nvidia to close above that. But what happens if we close above that and retest it? Well, you guys already know. You can then explore short-term calls. But as I said, my ultimate target on Nvidia is around 163, and I do think we are going to take these equal highs here at all-time highs. We will take it, and what happens if we break above here in a few weeks or months? I don't know when it's going to happen, but if it breaks above and retests this level, what do you think you're going to do? You already know the answer, but it's important to have an exit plan. So for me, even when I bought these calls, I said that if we close below this line, then I will be out of the calls and I will reposition myself. I've told you guys this before. I don't care if I'm right 100% of the time. I just want to be profitable. I don't care if I'm right. I can lose 5 out of 10 trades and still be profitable based on the way that I trade. Now, I don't want to lose 5 out of 10 trades, but I'm saying the number of trades that I never fret like, oh man, this wasn't a winner. No, it's very mechanical. I'm buying here. I'm going to ride it up to here. And if it gets below this line, then I exit and I find another trade, because I will, as long as I'm trading from these major levels that I've identified, these trades will hit. And in the off chance that they don't, I don't care, because when they hit, it's going to make me a lot of money. All right, let's take a look at AMD here. Now, AMD is no secret that I call it the advanced money destroyer, because the chart is one of the worst charts you've ever seen for a mega cap, okay? But AMD's been on a steady downtrend, opposite of almost every stock since October. Lower highs and lower lows, right? This is not something you want to see, but I'm thankful that at least there aren't a lot of fake outs here, because it's just a straight downtrend made up of lower highs and lower lows. Now, if it was faking us out, yes, then obviously there'd be a lot of lost trades, but there's no reason to enter this as long as it's in that. However, AMD did something very interesting today as of the time of this recording. Now, I was trying to potentially short AMD and build a bigger position to get down to the $100 level. The reason is because we have a big imbalance here waiting for us in this daily fair value gap. And it could still get down there, right? You can see that AMD quite often leaves a gap, tests the gap, drops, leaves a gap, tests the gap, drops, right? We left a gap, we tested the gap. Now, I did have a short position, but I ended up closing it for near break even, because this line is very important on AMD. Once again, if you could draw a horizontal line, you can swing trade. What do we have here? If we go back to 2023, you have all of this support. More importantly, resistance, 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 resistance. Clearly, this line means something to the market or the algos or whatever. So I took this line and I drew it all the way out. And if you extrapolate that, or extend it, I should say, that is the wrong verb. If you extend it all the way out here, you could see I have labeled it 2023 resistance. Now, it looked like we were going to reject from here, same way we did back then, but we did not close below that line. Towards market close, I saw that we were getting bought into after being sold off. We were now getting bought into, and we closed above this line. This could potentially springboard AMD for a move up. Now, I am personally not a buyer of AMD here. I'm not a buyer of call options, but I might be soon. So what I need AMD to do is this. I need AMD to close above this gap, something that it hasn't done throughout this entirety, right? Gap, 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 gap. It has never closed above a downtrending gap. This, if it does this, this will be the first. So I needed to close above this gap, which would then close above this trend line and a retest. Now, if it does this, I think that AMD can rocket up here. It already reported earnings. It's not going to report earnings for another 3 months. A report today came out showing that it's stealing more and more of Intel's market share. And I think that AMD could be the second big player behind Nvidia. I mean, Broadcom is worth $1 trillion quietly, but I'm talking about in the consumer space of chips. So I think if AMD breaks out here and retests this, then AMD will definitely be call worthy, share worthy, call worthy, leaps worthy, whatever it is that you like to trade. Just like I told you guys with SMCI weeks ago, right? I said, if it breaks out of this, then I'm interested in calls on SMCI. Now, one other thing, as I always tell you guys, 2025 to me, there's a lot of uncertainty, and I'm going to wait for the VIX to get below 15, and I will likely buy short-dated VIX calls as a hedge against my portfolio almost every single week. Really depends on where the VIX is and what's going on, but once the VIX gets below 15, then I will buy short-dated VIX calls. You definitely don't want to buy long-dated VIX calls. You will lose money trading that, but that is going to be my hedge. And I will give you a couple of bonuses. I do think that Google and Amazon are going back to all-time highs. Right now, this is the year of AI software. You see this with Palantir. You see this with CrowdStrike. You see this with Meta. You are going to see it with Google, right? Which there was a lot of profit taking after it hit all-time highs, and it reported decent earnings. Its CapEx was a bit larger than the market wanted, right? What it's going to be spending. That information, I think, is digested. Bouncing off of a major level, I think Google gets back to that 200 level, and I think Amazon didn't suffer as much as Google, and I think it's bouncing off of the 50-day, if I'm not mistaken. Yeah, 50-day moving average. I think Amazon gets back to all-time highs once again. Anyway, traders, that is it for this video. If I helped you in any way, consider leaving a big fat thumbs up. If you want to get access to all of my trades, link is in the description below. Come trade with me live every day if you are interested, or you can opt for the more affordable tier if all you're interested in is my stock market analysis and my long-term plays. Sign up for a public account below. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.